Welcome to TradeTheMBI.com. This is John. This reports for the 30th of May. Well, and as we ended the month, we had talked about this when we were looking at the potential for the break of support at the 23%, which was, well, let's just go ahead and mark it. It was all the way up at the 28.30, and I was talking about this 27.62 dip towards the algo. We didn't quite get there. We really got close, though. 27.66 was the dip. We're still in kind of ugly territory. Could be worse. You could see a much bigger breakdown of yellow below the blue, minus 22.69 to minus 20, which means that even though you're seeing a pop, no, that's not something you would want to be part of. Doesn't mean that you aren't going to bounce back and forth in between. This is what usually happens in a slow decline where, everyone's fighting back and forth. But we're really close off that algo level way early on a daily, but this rise of the short-term buyers, that's enough to give a boost. We'll see if that is able to maintain itself, but you would need to see a continuation of the dive of orange as well as some kind of turnaround for midterm and short-term buyers. Not in place yet, so I think that's mostly just a short cover, a little bounce, particularly here in soft pre-market. We'll see if it's able to sustain itself during the day. Again, clear rejection from the NASDAQ. I mean, it's exactly what we talk about for continuation purposes of a move. Ugly. But that's all right. It's been clean from the first DOC spread. The reality is that we had talked about the euro making new lows. It did that, bounced back from it, but we never saw anything that would indicate that it was going to turn around from that. And sure enough, right back down to exactly where we were before, as it continues to be a disaster for the Eurozone, which no shock to anyone who's really paid attention to any of that. But it's not really giving us any relief because from a commodity standpoint, there's not this impending idea that, the shock wave is going to strike it. Everything seems pretty orderly and just muddled. It's not even confused, it's just muddled. There's no real impetus to drive commodity prices any higher. Things are still basically stable. We keep moving towards highs and then coming back off them. It's kind of what a healthy market does. I've had to shrink the 5K down here all the way from these shorts going all the way up from 28.39. So this has been a decent overall move. We had that secondary call. It was short around 28.30 with a series of these resistance points. 28.19, 27.93 was the cap from before, and you can see that we're right back at it again. So we touched it here. We hit it again midday. That broke us down to the new lows, fought back in between with the rising DOC, came back under again and revisited the exact same things, and it's just, pretty decent from a 5K chart standpoint. But what I always like looking at is these oversold conditions and the transition between how much of a buy you can expect from those when they take place. For me, it's always pertinent because I'm looking for these crossover points of the gold above the magenta there. At the same time, if you have enough depth of the shakeout histogram, particularly down near that 13.5 when it happens, those usually have a little bit more carry through. But it was a classic move because you can see pump, 50% retrace, and then it does it again. It's just a question of, continuing to follow that and looking then for that gold popping right around that 50, and that brought us up to the equivalent of a 100% move, even though the 100% kept dropping a little bit. So the range got narrow. Not surprising coming off of such a big overall drop. Let's enlarge this baby a little bit. There we go. So from an intraday standpoint, we ended up with some nice turnaround buy scenarios where the red breaks past the previous range, and again, another one of those opportunities to look at that when you get this kind of like nice low rollover. Makes it very easy to see when you've crossed above it, which took place right there at the secondary dip, the first blue, which gave the justification with the steel as well as the green crossover. It was a little early for, complete confidence, but I don't mind this kind of play, particularly when you know you've got a half zone situation. So it's like, okay, well, I can go ahead and go with the momentum play and easy stop below the low and see where it takes me. In this case, it took us right to the 50%. Give a 50% retrace of that, and then another leg back up. So, and that followed through with that rise until you had the combination right there where the gold meets the Azure line, and that's usually where I start to look for any breakdowns, and that's where they began to happen, and that led to move all the way back down to this 23. So good stuff. I'll be sending out indicator renewals, and obviously they'll probably come in on the weekend. That way any of the little final adjustments I was working on for adaptations for these will come through with it. So all good. And we'll be able to start, effectively the summer months, because sell in May and go away is now over, and it's going to be exciting for the second half as we start to prep towards election cycle. Isn't that going to be crazy? Mamma mia. All righty. As always, trade well. We'll talk to you later.